Welcome back, ladies and gentlemen, and today's a special video because it marks, or this month, July 2024, marks 10 years in the markets for myself, and my God, have I learnt a lot along the way. So I wanted to share basically 10 years of advice or trading advice in 10 minutes. So let's get cracking. So there is so much noise out there as a beginner trader. What strategy do you look at? What time frame do you look at? There's so much to contend with. My advice to you would be, if you're just starting out or in your infancy stages, your first couple of years, would be there are many strategies that do work. When you have found a strategy or the generic overall strategy that you find works better for you, that's then when I want you to double down on that strategy and go back and back test that strategy, tens of years of market data. It's that process there that then allows you to tweak, refine that generic strategy and turn it into a very tailored strategy to you, because we all have different risk parameters or risk types and personalities, and a generic strategy obviously won't work, but it's doubling down on it, tailoring it, doing the lengthy hard work that allows you then to develop that edge, your tailored edge, and allows you to ultimately reduce your emotion when it comes to trading, increase your confidence, because you have tens of years of data to back that strategy up on, and that you know that strategy returns you consistent gains over a period of 10, 20, 30 years. Because we all go through downtimes, but nobody does the legwork. Not enough people, and I genuinely mean, I speak to so many of you guys, and I love that, but not enough of you have done the groundwork, the hard work. Go back and back test that potential strategy, because a lot of you are frustrated with your current strategy because you've only probably back tested it over a period of 4 or 5 years, maybe if not even that, and you're getting mixed results. You've got to go much further back. So do the work, because if you do that, it will help with so many other aspects of your trading, like reducing emotion, increasing execution and confidence and clarity on that rule set. Again, defining a really super strict set of rules that you know plays out because you've done the work, you've refined, you've tweaked. So do the legwork, work harder, and go back and back test. Again, moving on to that, point number 2 would be, there is a lot of noise, as I've already said, when you first start out. Try and get rid of all the noise out there completely. Find someone you trust. A mentor will massively speed up your learning curve and really allows and makes sure that you don't deal with any unnecessary information that you don't need or doesn't fit your strategy. So find someone you trust, work with them, pay to work with them, because that investment will 10x itself over the next period of years. Because you could go this solo, you could do this solo from all the free education out there, but it's a very generic, as I said earlier, it's not tailored. So find someone you trust, work with them, because it can massively speed up your learning curve and stops you making a lot of mistakes that a lot of the our more experienced traders like myself have made. So it's well worth finding a proper educator to help hold your hand through those first 3 to 4 years. Point number 3 would absolutely be stay away from lower time frames. Now, I am biased with this because I'm more of a swing trader, but lower time frames don't offer near as much as what higher time frames do. Higher time frames give us such overall clarity on market sentiment, market bias, direction that we're going to travel in. It mirrors up and gets rid of so much of that noise again. Higher time frames allow you to see where price is going in the next few days, the next few weeks, and it allows you to position yourself properly. Conferences are much more respected on higher time frames than they are lower time frames. And this is the thing, you can go down to lower time frames for entries, and that's fine. I'm not saying don't do that, but I'm saying keep all your analysis 4 hour, daily, weekly and above, because that's where you'll get your clarity. That's where you'll see the least amount of noise, and that's where you'll feel a lot happier and a lot less complicated. And I promise, in your first few years, if you can stick to those higher time frames, things will make so much more sense and will fall into place a lot better for you. My next point would absolutely be less is more, and this applies to multiple aspects of trading in general. I'll start by saying less is more in terms of the number of trades, especially when you're a beginner, but even as an experienced trader, I'm still very much a less is more type of trader. I take very few positions each week, but those positions are optimal setups, high quality, high risk to reward, highly probable setups that ultimately, when they play out, they really play out. So again, if you're starting out, try and just pick 1 or 2 pairs maximum. Have the corresponding index, have a few other of those corresponding pairs as well. So let's say you want to trade GBP USD, have the DXY involved, of course, obviously GBP USD, and then maybe have some AU, EU, USD CAD, but don't trade those, just have them because we want to use them as conferences and really get to know what GBP USD is like, really get to know what the DXY is like and the synchronicity between the two on higher timeframes and lower timeframes and with conferences and in terms of the way they work with one another and the personality of that pair themselves, because every pair is slightly different. Some pairs won't always sync up all the time, and certain pairs go off, like to react off certain fib levels or certain other levels that tend to be more respected compared to others. So really double down on just 1 or 2 pairs and get really, really good. You will be so surprised in a good sense at how much money and how much returns you can make just doubling down on 1 or 2 pairs maximum. Trust me. You don't need all that noise of excessive pairs because it's going to get in the way. It's going to cloud your judgment. Double down on 1 or 2 with the corresponding index. And with strict risk management, which we're about to come on to, I promise you will accelerate that learning curve big time. The next point, as I've just hinted onto, would obviously be risk management. You can do all the other points as I've just said, but if you haven't got that risk in check, then you're wasting your time and you'll be in the same position now as you are in 2, 3, 4 years' time. Keep your risk super low, and that should go for any experienced trader as well. But keep your risk super low as a beginner, because there's going to be a lot of testing, there's going to be a lot of experiencing out there. There's going to be mistakes along the way, but this is why I said earlier about getting a mentor, so we can smooth that learning curve as much as we can for you and minimize that downside. But keep the I want you trading live, because again, it helps deal with the emotional side. You won't get that if you're trading a demo, but keep your risk super small. It sounds crazy, but risk 0.2%, 0.25%. There's nothing wrong with that. You're still live in the markets, but then it means you have to be wrong hundreds and hundreds of times for you to actually blow your capital. And the amount of lessons you're going to learn along the way for both winners and losers is hugely paramount, and you can't compare that to a demo account. So start live, obviously with very little money that you can afford to lose, and just keep your risk super low, because there'll be lots of mistakes along the way, lots of type of setups when you're fine tuning and tweaking, but risk management is key. If you are not risking and keeping that disciplined, when you do have your losses, it's going to take you a hell of a lot more on your winners to recoup those losses and then some. So keep it super strict, guys. Less is more with risk management, I can assure you. That snowball effect and compound interest is massive when you can minimize those losses to 0.25%, 0.5%. And my final point would absolutely be is to, again, stay super disciplined with your trade selection. Optimal setups are the only things you should be entertaining. So let's say a potential trade setup only meets 85% of your criteria. That is a suboptimal setup. That is not a good setup. That is a setup you should not be taking. It needs to meet that entry criteria, that rule set every single time, or you don't take it. You still journal it and watch it play out without being in it, but you don't take it. You only take optimal trades, because losses, yes, we all incur them, and trust me, 10 years down the line now, we all still get losses. Trust me, it's normal, but it's how you deal with that risk-wise. But you can never kick yourself if you take a loss on an optimal trade with perfect risk management and lot sizing, position sizing. It's no biggie. You can move on straight away because you've taken an optimal trade. It's maintained your strategy that plays out over many years. So only take optimal setups, because then your losses are just losses, and that's all they are. It's a natural part of the market. But if you were taking subpar trades and you're then incurring losses, then there's a lot more to open up into that. Say, well, what was it? Was it because of position sizing, stop loss placement, didn't meet XYZ criteria? Get rid of all that headache. Only be selective with optimal trades, and that's all you execute. And this is why, again, as I said earlier, higher timeframes win, and they're much better. And this is, again, why I only take maybe 1 to 3 trades a week, if that. Last week of the UK election week, I took a grand total of 0. And capital preservation is key. So this is why it all ties into so many factors. I know I've only mentioned 4 or 5 points in this video, but you can see how every point, if you can nail that, it will spill over positively on all those aspects of trading that makes ultimately a successful trader. Okay, so guys, if you found that helpful and you are looking for a mentor, then please reach out. The link is in the bio for my education. I'm not one to usually plug it, but I really, really do believe in the product. The people that have come through it so far have really found a 10x on their investment. It's priced at currently 297 British pounds. And I know everybody that's come through the group so far has already made that back within quite a quick return, because the value in there is huge. And when you come on board with me, I really, really do go above and beyond. So that's the plug there. I'm not one to normally mention it, but if you do want to reach out, you do want that hand holding in those first few years of your trading, then you know where to go. Thank you for watching as always. Please like, please subscribe, and I'll catch you on the next one.